Hey guys, welcome to Sharks Academy, and I want to wish you guys a happy 2022. And I really hope that all of you can achieve your goals this year. Alright, whether is it trading goals, you're doing a business or whatsoever. So let's start off with dollar index. You can see currently we have a downside move. This demand was created, right? And we expected this demand to reach liquidity highs over here. So when prices broke structure over here, we expected this liquidity to be ran, and you can see it clearly mitigated some sort of supply on the lower time frame and then made its way lower. So this demand shouldn't hold, and we would expect a move into this bulk over here, right? This area of price action or consolidation or the previous reaccumulation phase. So I would expect a bounce at this level. So this is where I'm trying to trade towards, right? So this move from here towards this demand means that DXY is going sell, right? So if DXY is going sell, we are selling pairs like USD, right? Sell USD JPY, USD CHF, and maybe UCAD, right? And of course, buy the opposite direction. So we do not necessarily just look for sells or buys, right? It depends on the time frame you're looking at. If you're looking at the daily time frame, if prices break structure here, then yes, you can argue that we are going downside. Otherwise, if you're trading on the 1 minute, on the 5 minutes, you are actually just looking for the scalps in between the movements. So this is just what we think for dollar index. So next up, we have the Aussie dollar. You can see we have a break of structure here. And this break of structure originated from this entire leg, right? So the high or the point of invalidation is actually at this level. So based off the daily, we have two areas to sell from. We're looking to sell here. And we are also looking to sell here, right? So of course, the best prices would be at this level, and it doesn't mean that this level over here can't reach towards liquidity lows, right? And of course, you have to take note of this level as well. So this is an inside bar, serve as a demand. So what am I looking for when prices steps into this level of supply? If I'm a 4-hour trader, I'm waiting for prices to break a 4-hour order flow. Okay, so this is on the daily, right? So let's say this is on the 4 hours. Let's just go down to 4 hours. And you can see this entire framework over here is bullish. So I'm looking for 4 hours pro trend, right? So you can use a supply and demand flip. For example, prices steps into a demand, fail to make a higher high, right? Instead breaks down. So where am I looking to sell from? Here, right? Because this is the failed reaction over here. You can see this is a demand, taps in. This demand supposed to push prices higher to continue the bullish order flow on the 4 hours, but instead it failed to push higher and instead break down. So the key here is the reaction point. Here is where I'm looking to get involved, and this is where I go down to the lower time frame, the 15 minutes, the 5 minutes, to look for the shape before the breakdown. And this is how you catch the high RR moves, right? Having an entry over here, stop loss above the high, in for a low. And this is where you get the 1:14, 1:10. Otherwise, 4-hour traders are very happy to just trade it off like this, right? Stop loss above the high and aim for this. You still get 1:12 or whatsoever. This is just in terms of projection wise. We have to see what happens here ultimately, right? And this is the projection for Aussie dollar. So Euro pound is straightforward. You can see we have a demand, we have a break of structure. So this may not be a break of structure for some of you because it's a week out, right? So right now, our bias is still bullish because we are trading at the near of the bottom range, right? This entire weekly move has a demand at this level, and that is why we are still bullish at this point of time. So we can see on the weekly time frame, this has been breaking lower. You can see break of structure, even a week out. So where are we waiting for the break of structure? Towards the upside, because you can't possibly keep buying over here, right? Yes, you can. You can go down to the 4 hours and look for a pro trend like this, right? So let's say I'm a 4-hour trader. Once prices steps into my demand, I'm looking for a break of structure here. And you can see immediately you can get involved into demand areas like this, right? And maybe some demand like this as well, okay? Otherwise, if you're a weekly trader, look at this. Your weekly is still bearish, right? This move is all still bearish. And that is why this will remain bearish on the weekly time frame until it breaks a significant high like this. Okay, so if prices were to break this level on the weekly time frame, then you can expect a move towards the upside already. right? At least towards these liquidity points. Over here, and over here, right? Only if you see a weekly breakout structure. So whatever you're trying to do here on the lower time frame, you are just hoping that this respects the supply on the weekly, and this makes the run towards the upside. Otherwise, you should be patient, right? To wait for the breakout structure here before looking for longs. Next up, the Euro Yen. You can see we are delivering bearishly. Breakout structure, pulls back, breakout structure. So where am I looking to sell from? I'm looking to sell from here. Okay, so this is the supply I'm looking for. I'm looking for a lower time frame or 4 hours or 1 hour shift in structure. Again, a break, a pullback, and this is where I go down to an even lower time frame like the 15M or the 5M to look for the shift once again, look for sells. So when this happens, I do not immediately go down to the 1 minute time frame to look for the shift because this zone is so big. So the only way you can do that is perhaps go down to the lower time frame, like the 4 hours. And when you have your supply like this, right, in such a refined area, then perhaps you can go down to the lower time frame, like the 15 or the 5 or the 1M, to look for the structural shifts, right? Because this only happens once or twice, right? Imagine your zone being this huge, and then you're trying to look for this this movement. So this is what I tell my students a lot. You're going to keep looking for this. You can see how many times it's going to shift, right? If you're to work on the lower time frame before it actually breaks down. So yes, on technical sense, you are just going to keep looking for sells, and one of them will work out. But the truth is that once you have taken 1, 2, 3 or 4 losses in a row, can you still fire this trade at the end of the day, right? Because this is where most traders start to think that this zone is not good, their bias is wrong, and then they stop participating in this trade. And this is where it always runs, right? After you gave up the supply zone over here, you went to look for other pairs, right? You tend to look at Euro, Aussie. And then after one day, you go back to this chart again, and what you see is a huge dump like this. And then you blame yourself because you do not take the trade, right? This always happens. Next up, for Euro dollar, we are definitely bullish on this pair. And you can see this is the supply I'm looking to sell from, right? Because the previous redistribution phase was here. Okay, so my supply would be over here, and I'm looking to sell here. All right. So now, with the current move being bullish, when did it started to become bullish? After it breaks this high, you can see, right? Means this entire leg is ready for buys. So you are supposed to look for demand areas on a lower time frame like this. This is a demand. This is a perfect demand, right? This is rather huge. You can go down to refine it on the 1 hour, on the 4 hours. So on the 4 hours, you have this over here. Okay, and maybe on the 1 or 2 hours, you have this, right? And this is where you actually look for buys, right? All of these are valid. Okay, this demand over here before this larger demand may be used as inducement, right? So prices can come back down, give you a false shift before going down lower, grabbing this liquidity in terms of lows and trend lines before the real shift happens. So this is what we are looking for, and this is where we are looking to trade from. So of course, prices can come back down, right, towards this demand over here. Okay, but unlikely because prices taps into this demand, right? You can see this movement over here, right? Breaks out, taps into demand, breaks out. So the order flow is created. This has been mitigated, and of course, this is not, right? So I'm still looking for a move over here, ultimately. So next up, for the pound Aussie, we have a break of structure here, right? And we have a break of structure here. So now where are we in the markets? We have a break of structure towards the downside and a break of structure towards the upside. So this leaves behind this entire move over here as a valid supply, where prices are currently tapped into, right? And also we have a supply here, we have a supply here. So now all three of them are valid supplies for you to look for sells, right? And when prices break structure over here, we are almost looking for a bullish move. And when did this move came from? Let's play on the time frames. Let's go to the 8 hours. And you can see this is a demand zone that is valid for buys, right? So what are we looking for actually? If you're a 4-hour trader, this is where prices tap into a supply and is valid for sells. What you're looking for is a break towards the downside. And you can clearly see that there is this movement over here, a high, a low, a high, a low, and a high. So I want to see this demand fail, right? Which means I want to see prices tap in, react, fail to make a higher high, a breakdown. this move gives me a POI to work with because we have a supply generated over here, right? And then I'm looking to sell here into this demand. And then what do? I expect this demand to fail once again. I expect a reaction of this demand, right? A pullback, doesn't matter where, right? Here, you can even take out this high over here. Let's say it does this, it breaks down. Where is the supply that caused the demand to fail? This is the supply, right? And then all you need to do is to wait for a pullback into this level before the breakdown. And the next level I'm looking at will be this, right? So same thing, prices taps in, shows you some sort of reaction. And if it fails to make a higher high, right, and breaks down, this is where I'm looking to sell from. Okay, so all of these are supply and demand flips, right? It tells you the reaction failing, right? You need to see a demand fail, okay? And then trade off the supply that caused the demand to fail. So it's a very simple process. And whether or not you want to trade off purely based on this flip zone, it's up to you, right? For us, we go down to the lower time frame, like the 15 and the 5M, to look for an even smaller distribution by means of Y curve or whatsoever inside of all of these points to confirm these supply areas before looking for sells. Next up, we have the New Zealand dollar. You can see that we have a reaccumulation phase here, right? And prices are looking to grab liquidity towards the upside over here, right? So let's take a look at where prices are eventually moving towards. So we're operating on this entire movement. I think it was on the weekly, and you can see we are tapping into the weekly demand. So what we did over here on this smaller one here, this refined area, is to go down to the lower time frame to look for a refined area for a trade towards the upside, right? And of course, prices are tapping into this supply as well. Wicked out, not a body break, right? So at this point of time, it depends on you whether you function as a trader who use wicks breaks or body breaks. Okay, so now if I'm going to be a seller, I want to sell high. I want to sell at the end of this range because this high over here grabs liquidity. You can see grabs liquidity before the breakout structure towards the downside. So this is still valid for sells, right? No doubt we tap into a supply, a demand over here, right? So let me just label this breakout structure. So yes, prices makes a move up, grabs liquidity before the breakdown. This supply is definitely valid, and this supply may be the one that is going to bring prices lower, right? And with this, it shows you that demand failed. Okay, so what we are looking for, if you have a bias to the sell side like this, right? Because this is a breakout structure. So you can see we are still going bearish here. Okay, so now you are just facing a brick wall, or rather a support area like this, a demand, right? And what you're waiting for is for this demand to fail. So this is the kind of reaction you're looking for, right? Prices taps in. If it fails to make a higher high, right, and breaks down, then this is your POI to work with already. Otherwise, you're assuming that this demand is going to hold, right, by means of the lower time frame price action. You can see all of these breakout structure and the move and the bullish move upside tells you that prices don't want to go down yet. Okay, so with this, you have an immediate bullish move over here where you can trade from, right, all the way into this supply before looking for a redistribution to go lower. Okay, so next up for the dollar Canadian, it's pretty straightforward, right? We have a liquidity grab here, you can see, and now we have a strong sell side move, right? So where do we sell from? If you can't catch a move inside of here and inside of here, right, then just wait for this demand to fail. Because if I want to be a buyer, I'm going to buy at two areas. I'm going to buy here, and I'm going to buy here, right? And maybe somewhere lower inside of here, right? Maybe you can use this as a demand and 50% of it, something like this. Okay, so this is a valid demand if you're looking to buy from. But with that, I'm looking to sell. And where am I selling from? Prices are sitting at the demand now. I'm looking for this demand to fail. Right, I want to see a reaction, then the breakdown. So when this happens, this gives you a POI to work with, right? So again, this is your flip zone. And when prices break structure here, this entire leg is valid for sells, right? So you can sell at these three POIs over here. This is valid as well. Okay, so now the question to ask is, which supply is the real zone, right? This is where most traders ask, which is the correct supply zone to trade from? The truth is that you will never know, and there is no right or wrong supply zones, right? Incorporate a step 3 process in your system. you want to look for confirmations, and that is what we always do over here. We want to look for a confirmation on the lower time frame to support our bias that this supply is going to hold, right? This is the only way, or one of the ways where you can use confirmations to your advantage, right? You do not mean that entering first doesn't mean that you get the best risk to reward. Okay, so let's say, for example, just for an illustration purposes, right? This is a supply, right? You want to get in first hand. When prices taps in, you sell, you get 1:5. All right. So once I see this shift in structure, if I'm a confirmation trader, I look for a break of structure here. I look for the supply zone over here, and I fire a sell here. So now all of a sudden, can you see? I get a 1:15. You get a 1:5. You took the trade first. I waited for confirmation. So the myth about entering first is you will get the best price does not necessarily happen, right? And that is how you can use confirmations to your advantage. So next up we have the dollar yen, and you can see this is amazing. We are still looking for a sell here. Right, so prices are about to tap into our supply. Of course, you can use this entire supply, right? This is the real buy to sell. Otherwise, you can refine it to this inside bar and wait for a distribution inside of here to take prices lower. So again, it depends on you. Look at this, a wick out. So this may be a reaction, depends on what kind of trader you are, right? Because if I'm waiting for this demand to fail, I want a strong break. This is basically the reaction of the demand, right? And prices can still break higher, right? So if I want to have a clear movement, I want to see this breakdown, then this reaction point, this supply, is where I'm looking to sell from, right? But if you're fine with a weak break like this, then just take sells over here. Look for distribution, look for confirmations to take prices lower, right? And yes, my bias for dollar yen will be sell side. Lastly, for gold, this is a break of structure, okay, over here. And this is behind a liquidity area over here, alright? So let's say instead of looking for the liquidity zone to be breached, we are looking for the supply here, okay? So this is a more conservative take profit area because we understand that we can get rejection or reaction points over this supply. So I'm framing my entire bias towards the upside into this level. So I'm looking to buy into this level, alright, at the list. So you can see we have a very nice support area over here. And support to the eyes of the institutionals is to grab them. And we do not know at which point of time it's going to grab them. Maybe all of these supply zones you can see higher, or maybe the one over here is the supply that is going to bring prices towards this. Okay, which means to say a buy side before grabbing this, a buy side before grabbing this. This is definitely possible. And we do not know exactly when will this this support area will be taken out, right? Otherwise, we're just trading what we see. We have a break of structure again. We have a demand zone here. Okay, so ultimately, same thing. We are looking for a lower time frame shift in structure before the breakout towards the upside. So this is definitely what I'm looking for and will be waiting for. So before we end things off, for those who are asking what is a supply and demand flip, right? This is an example. Of course, you have to make sure that the entire market context is in the right place, right? Such as you're buying low, you're not buying high, and stuff like that, right? So you can see clearly this is a supply. We previously broke structure here, okay? And then prices taps in, reacts, then break structure, right? So can you see this body break serves as a break of structure, right? When this happens, look at the last sell to buy. Where is the reaction point? Where is the low that was created, that was reacted as well before the break of structure? It comes from here. So immediately this is your stop loss, right? And then you're looking for the sell to buy. Okay, and how do we take an entry? Just simply measure the 50%, get involved here. Right, stop loss beneath the low. So aim for highs. So where's my first take profit? Of course, my first take profit will be here. This is the immediate liquidity high, right? Because this is the highest it ever went to before it pulls back. So naturally, this was my TP1, and of course TP2 would be the highest point over here, right? So with that, I wish you guys a happy 2022, and I thank you guys for watching our videos, and continue to give us the support, give us a like and subscribe.